Meteorologist Tim Ross just talked about corn planting and some of that progress. Let's find out where things stand right now. We'll start here in Texas, and this is the most active states right now. Texas has 54% of the 5-year, that is their 5-year average, but right now this week they were 60%, so they are ahead of the 5-year average. Last week they had 58%, so a little bit of progress there. North Carolina, 30% of their corn is now in the ground. That is ahead of last week, but still behind the 5-year average of 32%. Tennessee has 11% of the corn planted. The 5-year average is 16%. Kansas has 6% of the corn planted. 15% is usually planted this time of year. And Missouri, 4% of the corn is in the ground now, as opposed to 18% for the 5-year average. So let's bring in Rich Nelson, Allendale Incorporated in McHenry, Illinois. Rich, these numbers here, the trade so far, are they watching these numbers, and or is some of this already built into the market?
You know, I do think some of this has been more or less built in the market, and keep in mind we are, of course, still very early in the planting season. The biggest week of planting is usually not until the second week of May. The second biggest week of planting isn't until the third week of May. So, I think the trade's mindset, I think yes, we do have active planting going on to the states up until the Midwest starts. Of note, Nebraska only 1%. Looking over as far as the numbers on Missouri, 4% complete. So as it stands, it looks like everybody else except the Midwest doing fine, but still maybe a little too early to have a major panic about it here just yet.
A little bit of reversal in this entire grain complex since yesterday's activity.
Certainly right. I think maybe some of the trade is a little concerned about this recent announcement from China about a potential, about a planned tariff on U.S. sorghum. In this case, 178% of sorghum's value. So maybe a little problem as far as this end. Keep in mind here for last year, China was buying about 82% for total sorghum exports. So we might have a small hiccup on the feed grain side here, and that might be an issue for us on the corn here today.
While we're on the topic of corn, let's find out where the numbers stand here today. We'll start here on that front month of May corn. It's down 2 pennies at 3.80 New crop December corn down 1 3/4 at 4.05 For the soybean market this morning, it's also on the mixed lower side here on the front months anyway. May down 1/2, 10.41 but new crop November soybeans up 1 1/2 at 10.41 3/4. On the wheat market side of the grain trade today, May Chicago wheat up 5 1/4 at 467.5. July is up 3 3/4 at 482 3/4. July Kansas City wheat is this morning we're trading here for July wheat up 3 1/4 at an even $5.25. The high of that contract is at 5.05. For Minneapolis July wheat, we're up 3.5 cents at 6.19 3/4. While we're here on the wheat, I want to stop and ask how much chart damage was done over these last couple of sessions, and what will it take to overcome that, do you think?
And that's a great discussion. On the charts, we did have these downside gaps open for the wheat, and we filled those gaps, and we're still at these lower prices. That's actually not a positive sign on the charts, and it does imply that perhaps maybe this change in the forecast that this market is watching for these next few days might be an issue where the market is reflecting this in the current action here.
Cotton planting progress is starting to pick up the pace here also. Let's find out where the cotton prices are today. And we find here where the nearby contract of May is down 74 at 82.51. The new crop December cotton down 36 at 78.18. So a little bit of weakness here also. Just changing now, down 41 at 78.13. When we return, we'll check back in with Rich Nelson. We'll talk to him about the livestock trade. That's coming up next right here on the Marketing Report. All right, we begin this livestock segment here in the live cattle complex first, and we're higher all the way across the board. The June contract is up 102 at 105.20. August is up 50 at 104.70. And for cash references, April live cattle up 73 at 117.88. The feeder cattle market side of the trade also for the feeders yesterday, a little bit of weakness there on that front contract yesterday also. April feeder cattle also down 14 16, now 17 at 139.05. Mayo, though, is up 24 at 140.62. August feeder cattle up 47, 145.25. We'll pause here and talk to Rich Nelson, Allendale Incorporated, bring him back in to talk about this. Rich, here we are setting up for the grilling season, if we could ever get spring to show up. And a lot of these end users are probably watching this market just as closely as the producer.
They certainly have been. And one thing we learned from yesterday's weekly report from USDA called the Weekly Comprehensive Box Beef Report is that end users actually were active last week in securing product for extended delivery. So we talked about this cold weather issue here being a problem for the grilling season, like you mentioned, and now it's been interesting that they're in this low price period of the past week. In fact, the past 2 weeks, end users have been active. They picked up about 65% more product for extended delivery last week than last year. So in this case, certainly another positive sign on top of some other good developments on the cattle side.
Well, could that lend a little bit of maybe some optimism to the cash price maybe this week?
It certainly could. One thing, of course, on the other big list of issues is this big question about supply here for April, May, and June. USDA has been calling for these very large numbers. As it stands so far, they're not showing up here just yet. So I think on this end, we probably could see some cash cattle stability, if not actually a higher price here this week. Obviously, we're waiting to see those numbers, but it looks like for right now, they won't be seen in April here.
Do we have any gaps in this June contract of the live cattle that we need to go back and take care of?
And as far as the downside issues here, nothing that's dramatically too much of a problem to speak of here as far as the cattle end of things here. And of note here, on the cattle side, at least on the charts, some intraday numbers maybe on that June just under 104. But beyond that, really nothing major that sticks out. That's a concern here.
All right, let's find out what's going on in the hog complex also here today. The hogs well, yesterday it was mostly kind of a weaker day. Right now, May hogs are down 6 at 68.12. But June, July, August, and October all higher. June is up 10 at 76.90. July's up 13 at 78.80. So, Rich, this hog market, kind of a little bit of a reversal here, finding some firm ground, it seems.
That's exactly right. I think right now we're trying to look at what's really bearish in this hog market, and as it stands, maybe if this potential changing forecast for maybe that early May period, this potential change there, which some forecasters are discussing, if that does happen, we might see that similar type of continued rebound as we saw in the last couple of days as far as the cattle end of things here. We just certainly do like this hog market from a supply-based standpoint. We don't have this looming threat of major numbers up ahead. In fact, we'll be declining on a seasonal basis here in the next few weeks.
Well, okay, you talked about the end user in the beef complex. What about the pork side?
And as far as this goes, still seeing some general okay-based buying here. We don't see them doing this major buying here from a value-based standpoint. I think maybe one sticking point is this concern about this weather situation, and we'll probably see that change around here if this weather forecast change does hold.
Again, the weather really affecting these markets. Rich Nelson, Allendale Incorporated, here with us. Rich, thank you very much. Let's check the dollar also. Earlier, the dollar was basically kind of a mixed affair, but we are going higher now for the June. We're up 200 points at 89.330.